Good morning, everyone. I'm He Haonan, an applicant for Master of Science in Finance in Hong Kong University of Science and Technology. It's my honor to speak here, and I'm very glad to share my topic with you. Today, I'd like to talk about the impact of International Financial Reporting Standard 16, and it requires that leases longer than 12 months or over a certain amount be reflected in balance sheet of lessees. Now, let's get to the presentation. I want to explain this issue from financial statement perspective and to give some advice about what relevant companies should do to cope with this change. And I will take Tesco, a listed company in the UK, as an example. As we can see, here are some statistics from the balance sheet of Tesco at 23 February 2019, and this shows the changes that will result from the implementation of IFRS 16. If IFRS 16 is followed, Tesco's total loan current assets will increase by 22% and its total loan current liabilities will increase by 66%. And the main reason is that rights of use assets and lease liabilities are added to the balance sheet. Next, let's look at some changes in Tesco's income statement for the 52 weeks ended 23 February 2019. Cost of sales and administrative expenses reduce, and finance costs increase, as straight-line operating lease rental expense is replaced by depreciation of the right-of-use asset and interest on the lease liability. This results in higher gross profit, operating profit, and operating margin, as the interest expense is front-end loaded and decreases as the lease liability decreases. Profit before tax is lower in the early stages of a lease and higher in the later stages when compared to a straight-line rental expense. And profit before tax decreases by £57 million, and profit for the year decreases by £50 million. And this page is about the expected impact of IFRS 16 on the cash flow statement for the 52 weeks ended 23 February 2019. IFRS 16 has no impact on total cash flow for the year or cash and cash equivalents at the end of the year. Cash generated from operations and free cash flow measures increase, as operating lease rental expenses are no longer recognized as operating cash outflows. Cash outflows are instead split between interest paid and repayment of obligations under leases, which both increase. And on this slide, I'd like to show changes of several key financial indicators. Debt-to-equity ratio and the leverage ratio increase because of the dramatic increase of liabilities and the decrease in equity. Meanwhile, asset turnover ratio increases as the total asset increases a lot and the continuing operations revenue doesn't change. And the current ratio also decreases as current liabilities increase a lot. In addition, changes of earn per share and the revenue on equity are uncertain. At last, I want to give some advice to the listed companies who adopt IFRS 16. First, as a lessee, its assets, liabilities, expenses will change. This requires it to make some adaptations when budgeting. Secondly, if the lessee's salary system refers to the financial index, it needs to re-establish a set of new quantitative salary assessment standards. At the same time, relevant companies need to update their existing information systems in order to collect more information related to leasing. And these are my conclusions. In conclusion, several key financial indicators will change due to the implementation of IFRS 16, and the lessees need to take some actions to adapt to the new principle. And this is the end of my presentation. Thank you very much for listening.